All right, let's jump right in today with some meaty policy. We have so much to talk about today. California recall is tonight. We'll be streaming results live. We have a new tax proposal. We have new anti-vax mania. We have all sorts of different things. But let's start with some policy material from the Democratic Party. Democrats are seeking to increase the corporate tax as well as income tax on the wealthy to pay for this $3.5 trillion plan about which Joe Manchin is talking, et cetera, et cetera. So let's start with a report from the Associated Press about the proposal. We will then look at it item by item, and then we will then look at some of the, I guess I would call it hyperbolic, panicked reporting about if you make 5 million and live in NYC, you'll pay 60% total. OK, so we'll go through it piece by piece. That's the way we like to do it. House Democrats unveiled a sweeping proposal yesterday for tax hikes on big corporations and the wealthy to fund Joe Biden's $3.5 trillion plan. The proposed top tax rate would revert to 39.6% on individuals earning more than $400,000 or $450,000 for couples. There would be a 3% tax on wealthier Americans with adjusted income beyond $5 million a year. For big businesses, the proposal would lift the corporate tax rate from 21 to 26.5% on incomes beyond $5 million, slightly less than the 28% rate the president had sought. In all, the tax hikes are in line with Biden's own proposals and would bring about the most substantive changes in the tax code since Republicans with then President Donald Trump slashed taxes in 2017. Business and anti-tax groups are sure to object, but Democrats are pressing forward. All right. So where do we start? Well, what are the main provisions of the bill and how do they change from what we currently have? So let's look at it. The top tax bracket this is on individuals. The top tax bracket would increase from 37% to 39.6%. This is that infamous 2.6% difference that Democrats and Republicans have been arguing about for a long time. Remember, going from 37 to 39.6, that's back to the pre-Bush top bracket. Before Bush, the top tax rate was 39.6% under Clinton. Bush lowered it to 37. Obama let it go back up to 39.6. Trump went back down to 37. That's the scope here. OK, it's a 2.6 percentage point gap that is the subject of the argument and the debate. Now, the wording has been muddy and it's already been changed. The bracket would start lower. Right now, that top tax bracket doesn't kick in until a couple makes $628,000 a year together. It appears as though under the Biden plan, under the Democratic plan, the House Democrats plan, that bracket would start lower at $450,000 in joint income per year. OK, there would be a 3% tax on incomes over $5 million a year. OK, now it's, with all of these things, there's always a question of how much are you capturing by doing this? There's an argument to be made that a lot of people who make a ton of money are not taking a salary above $5 million a year, that a lot of that would be in stock options or in other types of deferred compensation, and it would avoid that 3% tax. But OK, we'll deal with that eventually. 3% tax on incomes over $5 million a year and a corporate tax increase from 21% to 26.5% only on incomes beyond $5 million. Now, remember, this doesn't apply to so many corporations, LLCs, S corporations, etc., because those are what are called pass-through entities, and the income is taxed by the individual stakeholders on their personal income taxes. So this would apply to a small portion of corporations. And remember, if you're currently avoiding a 21% tax rate, you would then just go to avoiding a 26.5% tax rate unless we put in place a corporate minimum tax or some other mechanisms, another issue that we've talked about many times. The estimates are this would raise about $2.9 trillion of the $3.5 trillion that the legislation that is being discussed would cost. All right. Now, there are some headlines that have been floating about, in some states and some cities with this proposal, individuals who make a lot of money could end up paying around 60%. For example, there's a CNBC article which says top earning New Yorkers, that's New York City, could face a 61.2% combined tax rate under the House plan. Californians could be paying a 59% rate. How could this be? Well, let's go through it. First of all, you would have to be at the top level. OK, you'd have to be at that 5 million a year level. And by the way, if you're at 5 million a year, you actually don't pay the 3% surcharge, because it starts at 5 million. But you could be in New York City, right? You pay 39.6% on income. It's a marginal tax rate, 3% surcharge, 3.8% net investment income tax. That would get you to 46.4. And then if you're in New York City, you could have a combined state income tax and city income tax of 14.8. You combine the 46 and the 14 and it's 61.2. Now, that's not your effective tax rate because remember, these are marginal tax rate. It doesn't account for the standard deduction, other ways to reduce tax liability. But that's where they're getting 61.2. Is it exaggerated? Yes. Are people who make that much probably going to pay a lot more if this passes? Yeah, they probably will. But remember, unless you're really bad with money, when you make more and more money, you're spending a smaller and smaller share of your income. I've said before, I'm very conservative financially. I save the vast majority of my income. I don't spend it. I live well below my means. So if my income tax went up 2, 3, 4 points, I'm saving less. It's not actually affecting my day-to-day budget. And it's important to understand that at these super high levels, if you're making 20 million a year, unless you're doing really bad financial things, you're not even going to feel this. Now, you can still argue that it's too high or that's a different argument. But the argument that, the vast majority of people that are going to be affected by this should not be spending anywhere near what they make. Still can debate whether this is, quote, right. Okay, California, similar example. You could have that 46.4 total federal and then 13.3 state. That would get you to 59.7. In New Jersey, you could end up at 57.2. Hawaii, 57.4. One other issue is we don't know whether the limit on SALT, state and local tax deductions, is going to be removed. This is just a proposal. And for people saying this is too high, people are going to move out of New York City, they're going to move out of California. The market will tell us, if it passes and people start leaving New York City and California at higher rates than people generally move in and out, then it will be a sign that it's too high. And remember that even if people move out, the federal government or even the state, depending on, what's going on, they could end up with more money because there is taxation is sort of on a curve. And you could raise taxes and push out taxpayers, but still take in more money in total. That's just a broad, macroeconomic taxation concept. Here we're talking about federal, though, and important that this does nothing about the multinationals that can use different accounting tricks to book revenue and profit in different countries and to end up losing money on paper in the United States. This won't change that. You would need a total revamp. And of course, this is only a proposal. We're going to follow where it goes. One of our sponsors today is Blue Chew, a unique online service delivering the same active ingredients as Viagra and Cialis in a chewable form and at a fraction of the cost. And they're giving my audience an entire month's supply for free. So if you think you could benefit from an extra boost of confidence when it's time, all you have to do is take a short quiz on their website. A licensed doctor approves your prescription. The medication comes straight to your home within days in a discreet package. No driving around to the doctor's office or the pharmacy. No waiting around. No awkward conversations with your doctor. All of Blue Chew's tablets are made in the USA. The entire process is just a few clicks. Go to bluechew.com. The link is underneath this video. They'll give you an entire month's supply for free when you use the promo code PACMAN. All you have to do is pay $5 shipping.